Hello, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today, as you may have noted, on a different background, problems with electricity, but hopefully I'll have a better background on the next session. So we will be looking at what's the current events happening in the markets today, try to understand the major market patterns, market structures, and hopefully everyone will be able to trade from an informed perspective. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So let's get to it. As usual, this is a disclaimer that this is not investment advice. It's not a recommendation to trade. So you should always do your own analysis, your own due diligence, and practice proper risk management. So that being said, we can jump right into the economic calendar, try and understand the important things happening in the markets today. So today being Thursday, the 25th of July, Friday the 26th of July, we have quite a number of things happening in the markets, with the most important thing being the core PCE price index. So as you can see, early in the morning, we had inflation data coming in from Japan, where the Tokyo province reported 2.2% inflation as expected, and this was slightly higher than the previous reading, which was 2.1%. So for core PCE price index, you have to understand a couple of things. So one, PCE price index is a measure of inflation similar to CPI. It basically measures the change in the price of goods and services purchased by consumers, excluding food and energy. So that's why we have the word core. So without core, it basically measures the price of goods and services that are purchased by the average household in the US. But the core data point basically removes the volatile prices of food and energy. So why is this important? The core PCE price index is the Fed's favorite inflation gauge. So when the Federal Reserve, which is the central bank of the US, is looking at the economy in the US and trying to understand the changes in prices, it may use the consumer price index or CPI, but their favorite inflation gauge is the core PCE price index. So from what we have seen in previous data is that inflation has been reducing over time. So for core PCE price index as of June last year was at 4.28%, way high compared to the Fed's target of 2%. However, we have seen progress in inflation getting lower and lower over time. And as of the May of this year, we had 2.6%. So as you can see, the Fed is getting closer and closer to its target. The target is 2%, and we'll be getting one more data point later in the day today. So what are the expectations for today? So the expectation is that the core PCE price index increased by 0.2% in the previous 1 month. And if we look at this other economic calendar, then we can see the expectation. So I'll try and go to the calendar directory. Hopefully everyone can see this. So it's highlighted in red, meaning that it's a data point that has the potential to move the markets a lot. So month over month, previous was an increase of 0.1%, but pay special focus on the year-over-year change, where we're expecting that the number reduces to 2.5% from the previous reading of 2.6%. So if you're looking to trade this data point, this is just PCE. For core, it's also the same, 2.6%. Previous, we're expecting a drop to 2.5%. So if you're trading today and you're trying to observe the markets, looking for opportunities, then use the tradingeconomics.com website. It has a much better economic calendar, and pay special focus on PCE price index year over year, as well as the core PCE price index year over year. So the overall expectation is that inflation year over year dropped to 2.5%. If we get much lower than this, then it's indicative that Fed is very close to achieving its target, So sorry everyone, I had a problem with my connection. Hopefully it's back and you can be able to hear me clearly. So thank you for your patience. Let's complete this. So I'll try to make it quick for you guys so that we can grab this concept as fast as possible. So I'm looking at the comment section. Hey Sheldon, Molenga, Lucy, thank you for joining. Hello Thomas Mashuma, Joseph Gisharu, and Sam. Thanks guys for your patience. So as I was saying, we'll be looking at the Fed Watch tool and see the rates that we're expecting. So on the next meeting, that's the Fed meeting, which will be on the 31st of July this month. We don't expect any major changes to interest rates, so we expect rates to remain the same at between 5.25% and 5.50%. However, on the September meeting, there is a very high probability, which is currently at 87.7%, that the Fed will be cutting interest rates by 25 basis points to between 5% and 5.25%. So with this in mind, as I said in previous sessions, the Fed is traders are not waiting until September to start shorting the dollar. So right now we can already see the dollar weakness being felt in the markets as a result of that expectation that the Fed will be cutting rates. So on the next part, we look at a couple of charts, try to understand the major movements. So I'm hoping everyone can see my screen. Just sharing the MetaTrader 5 trading platform. So on the MT5, you can see that after yesterday's GDP data, which came in hotter than expected, meaning that the US economy is currently very strong, what we witnessed is the dollar index virtually remaining the same. So it's still trading within a range. So we can say for the better part of this week and Friday last week, there hasn't been much movement in the dollar index. However, if you look at US equity indices, beginning with the Dow Jones, there was a big rally after the announcement, and then later in the evening, it erased some of those gains. However, today has been very positive, and the market has been moving much higher. So in terms of looking for opportunities today, I believe US stock market should be recovering, and these indices might be experiencing some good rally today. So the bets for the day is that the market at least gets back to the previous high. That's the high that we saw yesterday. So the potential for the market continuing with this movement, especially in the New York option, remains quite positive. So I expect to see more recovery in the Dow Jones. So it's the same story for the Nasdaq, despite the weakness and a drop of about 9% since the previous high. We are seeing the market being quite positive. An impressive recovery today. So I expect the same to be happening. And of course, for SP 500, we're also seeing the same. So I believe these are the favorite charts for the day. Good chances that the market will get towards the previous high. So on the other hand, we have the USD JPY currency pair, which has been pretty weak. So as you can see, for the last 3 weeks, the dollar has been losing ground to the Japanese yen. And now we are seeing some form of recovery. So from the 1 hour chart, this is how it looks like. So we are almost eclipsing yesterday. So chances are that the market will continue recovery and get to 155.367. So for the Euro USD traders, I wouldn't recommend looking for opportunities unless there's a breakout. So from what we are seeing this week, it's more of a sideways momentum. You can see that the market hasn't broken that level. Then on the lows, this is what we are seeing. So on average, it seems like the market is just moving sideways. So only price action we are expecting today is after the core PCE price index data. So I haven't mentioned how this might affect the dollar. So if the core PCE price index comes in hotter than expected, meaning that it's higher than expected, then that pushes the Fed to hold rates higher for longer. It's positive for the dollar. However, it's very likely that the inflation will drop to a much lower number. And as a result of that, we could be seeing the dollar remaining weak in the day, which means that the euro could gain some ground against the US dollar. So chances are the market will break this upper trend line. And if this happens to be the case for the day, then we should be looking for buy positions after the market breaks this area here. And of course, when you're looking for targets, you look at the previous high. So a price action level around 1.08958 seems to be a really nice target. So outside of this, I know there is a lot of you guys who are using gold as a favorite tool of trade. So clearly, we've had 2 bearish days. So as you can see, on on Wednesday and Thursday, we had strong bearish momentum. We hit a major support area around 23.52, and the market started bouncing from there. So as of today, we will be waiting on the core PCE price index data to react to, and this might present opportunities for trading gold later in the day. So clearly, since yesterday morning, this has been the price action in gold. So overall, nothing much has been happening. So it's more of a sideways momentum. So we always try to identify the trend before identifying the direction the market is taking. So positions could apply if we hit this area of 2381, and of course the support level of around 2354. So if the dollar happens to be weak, which is quite likely as a result of the core PCE price index, gold could potentially around 2400. So opportunities could arise above 2381 and rally all the way to 2400. And this is if inflation comes in lower than expected. However, if it's higher than expected, then we should be expecting some much more bearish momentum in gold, and price targets could be all the way down. For instance, we could be seeing gold. So if gold breaks to the lower side, then 2332 is the next price target. So we'll be waiting. We'll be very observant, and once we get the data, then we'll be looking to react to it. Hopefully, everyone will be able to benefit from this. So that's all for today. Today will be quite a short session, and take advantage of those opportunities, especially after the announcement of the core PCE price index data. So remember, we have a new episode of the Bullish Banter podcast. It's available on all podcast platforms. So you can check out FX Pesa YouTube. You will notice that there is some really good content on that podcast. So make sure to leave a comment. And at the same time, if you're looking to register for a new account, check the links in the description below. And that's on YouTube. If you're on X, you have to visit the FX Pesa handle. So at the same time, if you're just beginning your trading journey, make sure to visit FX Pesa YouTube and then look for the Novice to Pro series, which is a 10-episode course designed to help you transition from a complete beginner to at least a technical level trader, and with experience, you become a pro level trader. So thank you very much, guys. Thank you for your time, and I hope to see you on the next session. Enjoy your trading day, and at the same time, have a beautiful weekend.